Good news if you want to buy a home. Senators have tentatively agreed to extend an $8,000 tax credit for first-time home buyers. And now they're sweetening the pot a bit. They are offering a $6,500 credit to some repeat buyers. This comes after a report showing a slide in home sales for September. So will this tax credit serve as a stimulus, or is a new downturn imminent? Joe Krier, president of Krier Wealth Management, is here to break it down and discuss other factors affecting your pocketbook. So a lot of people said that this home buyer credit thing, once it was done, that we were going to see sales go down again, and we're starting to see that trend, aren't we?
Yeah, we were, and we are, I should say, because really, even though it expired is set to expire at the end of November, right now it's a little too late because it's available upon closing on a home. So, as you know, it takes longer than 30 days usually to close on a home.
Oh, yeah.
So effectively, it's already kind of out of the mix. And now Congress is stirring the pot, talking about it, and they've agreed in principle to sign something before the end of next week. We think it's going to be packaged in with maybe a unemployment benefit extension or maybe even part of the health care bill or something, but they do need to get something finalized right away.
Okay, there are so many questions to ask about this. There are some parameters, and one is that you have to have an agreement signed by next April. And I know these details are still being worked out in the Senate, and they may change.
Right.
And another, for those home buyers who already have a property, they must have been in their current home for at least 5 years. They don't want flippers, in other words, right?
Right. And, you know, it's I guess you could say they're taking something that was straightforward and making it complicated. But what they're really doing is expanding the scope of it because they do feel that it was effective at getting money in motion in the economy again. And like any other parts of the stimulus package, it's all about limping things along until the economy takes over on its own.
And a lot of people had argued that they should make this tax credit available to investors all along because they felt like they were the ones who were kind of going to stimulate the economy. Obviously, there are some pitfalls with that too.
Sure, and you know, one of the big parts of this is if there's a home bought, the real estate agent makes a commission. The real estate agent goes and spends it at the grocery store. The grocer turns around and spends it on movie tickets. And so what they're looking for is an $8,000 credit to be spent 3 or 4 times over, and that really gets things going. I'm kind of going into economics 101 here, but you know, the gist of it is they're putting money in the hands of people who want to spend it.
So how much is this going to cost? Have they figured that out, and where's...
They have not, and there's a lot of different ways to look at it.
Yeah.
Some people say, hey, these people would have bought homes anyway, so it's just money being pushed out there. The raw numbers right now, I think, are something like $150 billion. We'll see. You know, we'll see where it goes. And people are kind of looking at this and saying, hey, is everything that's happened good in the economy this year due to stimulus? You know, they watched, like you mentioned, when the cash for clunkers expired, all of a sudden car numbers dropped completely. And they're looking for signs that the economy is actually able to stand on its own 2 feet.
And have there been those signs?
Not really, just yet. It's you know, we're looking at the stock market, the big rally that's occurred. A big part of that came just from people realizing that, hey, we're not dead on arrival here, you know, like we thought back in March. So now we're looking for some kind of growth.
All right, there are some other things that are irritating people financially this week. What are they?
Yeah, there's kind of a lot. You know, we do have the banks are still limping around, and a lot of people didn't pick this up, but last weekend the FDIC was in the state of Florida forcing 3 or 4 bank closures. GMAC is on the ropes again. They're looking for their 3rd round of stimulus money to keep their doors open right now, and that's got people worried. Lowered expectations. Corporations and prognosticators are starting to reduce their estimates for, you know, how well the economy is doing. Later today, we get gross domestic product. That's a big number that's going to tell people whether or not we grew in the 3rd quarter. And people are just getting impatient and tired. They're tired of waiting for things to kickstart, and we think it's going to take another 6 to maybe 18 months for this economy to really get going on its own.
6 to 18 months, all right. And then quickly in 30 seconds, what should our viewers be doing now?
Yeah, you know, we do have to be patient. There is impatience out there. You can't expect a market rally like this to go on forever. So you do have to kind of review your situation, look at the fact that, hey, we're 8 weeks away from the end of the year here, or 9 weeks. You've got to know how to make changes. If you want to reallocate, say, your 401k, be prepared to do that. And you do kind of need to have a sell strategy. We can't just drift through this and hope that somebody else is going to take care of everything for us.
Okay, thanks. Joe Krier, president of Krier Wealth Management, here to talk about the irritating things in the economy. But there have been many over the past year.
That's for sure.
Thanks, Joe.